Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/Rive to receive the top 10 stocks to buy right now. Verizon can't seem to catch a break. The stock is down 23% in the past year, and shares only trade at 9 times earnings, and the dividend yield is 6.3% for this stock. This looks like an incredible value, but the market still just keeps throwing the stock out. It keeps underperforming. So I want to give a long-term view of where Verizon is sitting, why I'm still bullish on this company, and 2 things that I think the market is missing with Verizon right now. Thank you for joining me, and while you're here, please subscribe to Rive Investing. It really helps out the show. Share this with anybody that would be interested in learning more about Verizon, and give this video a like or leave a comment in the comment section below if you would like. So let's talk a little bit about the problems at Verizon and why the market does not like this stock. Verizon has been losing customers to some of its rivals. Basically, its postpaid churn is on the rise. That means that more customers are leaving than investors would like, and they're not attracting new customers to replace them. That has been happening for a couple of quarters now. Basically, the mobile numbers are essentially flat. So that's the criticism of Verizon, and that's really bad for a company like Verizon because they're putting a lot of money into building out the network that they have, buying spectrum, things like that, taking on debt. And if you don't have customers, an increasing number of customers paying for wireless services, then over time your net income erodes. So that's what the market is seeing. But I think there are a couple things that are being missed. The first thing I want to highlight is the broadband business. This is a relatively new business, at least the modern version of Verizon's broadband business. Verizon has always had fiber optics, or what they call wireline businesses, going into people's homes. But the new product now with 5G is actually what they're calling fixed wireless. This is essentially a wireless router that simply plugs into the wall, and now you can have 5G connected internet in your home with little more than something that's plugged into the wall anywhere you want in the house. This is really advantageous as the cost of cable internet goes up and the speed has not really kept up with something like 5G. I've been using the Verizon router for about a year now, and it's faster than the cable internet that I had from Comcast. That's why I have kept with it, and it's been a really great service. It's opened my eyes to what the future of Verizon might be. So I think that's really the core product that the market seems to be missing now. It is true that Verizon is struggling with those wireless customers, but you can see from this chart that they're adding 377,000 broadband connections last quarter, and that has been increasing over time. I think that will only increase. What that does is it makes the customers that are getting this service a little bit stickier if they're adding a mobile phone to a fixed wireless connection, and it increases the revenue that Verizon is generating. So over time, that should help the company grow and increase margins. But here's the next step for Verizon. That is bundling streaming services. If you think about the triple play that we had in the past from cable companies, it was cable TV, cable internet, and the phone line. That was 3 services that people needed. Why not bundle them together? And then it makes people less likely to cancel any one given service, even if you don't put a lot of value in it. So I think that Verizon is starting to do something similar with their mobile phone business, now the broadband business, and then add in streaming. If you think of what has happened in the streaming business over the last 12 months, the problem for companies like Disney and Netflix is not that customers aren't attracted to their products, it's that it's really easy to cancel. They will have a really high churn rate, and then you need to attract those customers back, maybe with new shows, maybe with advertising, but there's really no incentive not to churn out of a given service or maybe a number of different services on a month-to-month basis. But if they're bundled in with your smartphone and your home internet, that can actually be an advantage for both Verizon and the streaming companies. So we're starting to see that right now. You can see here that Verizon is working with Disney and Apple to bundle some of those services together. I think that will continue over time. And what investors will want to look for is both increasing subscription numbers. Not only does the broadband number keep growing, but does that mean that Verizon is able to keep more of their mobile customers? I think that will be really critical. And then what is the revenue and margin per customer for Verizon, because I think this is where you have an opportunity to grow all parts of the business and increase profitability over time. The advantage for investors is they're getting in at a really good value. You're not paying up for a company hoping that it's going to grow. If broadband continues to grow and streaming does get added to this bundle, I think that's only beneficial for Verizon. The stock could really shoot higher given the fact that right now you're buying at a price to earnings multiple of 9 and a dividend yield over 6%. I really like this as a value stock with the optionality to become a growth stock. What do you think about Verizon? Leave your comments in the comments section below. Please subscribe to Arrive Investing. Thanks for watching, and I'll see you here next time.